Okay, good morning, everybody. This is nice and early, 7 a.m. on a Sunday morning. We're doing a special. This is a pre-recorded a demo day with Next Superstock Organic Garage. We have Matt Lurie standing outside. Matt, good morning.
Hey, good morning, Jack. Nice to see you.
Matt, so here we are, Sunday morning. It's now. This is what time? What are your store hours, by the way?
Store hours Monday to Friday 9 to 9, Saturday 9 till 8, and Sunday 10 till 6.
Okay, perfect. Okay, so basically, so what we're gonna do is we're gonna go into the store. This you're opening in 2 hours. I guess we're doing this because so we don't disturb anybody. So this is the store we're looking at. This is in Toronto.
Yeah, this is our Junction Market location, located in the west end of Toronto.
Okay. So we're outside. I can see the sign kind of. It's lit up, and obviously the lighting. We're not capturing the camera, but
Yeah.
So I see this organic garage sign.
Yeah.
Let's get a tour. Let's get a tour. What I want people to understand is what makes organic garage unique. Like what makes you different than than some of the competition kind of in the space and all that good stuff. All right. So this is
Yeah,
what.
so let me walk you in here.
Okay.
So this is our front entrance area to our beautiful store, and I'll walk you in and I'll show you around. Like you said, all the things that kind of make us different, each department, and just make sure that everybody understands that we're a full service grocery store. We touch every department. So let me walk you through. So our front entrance area. Sorry, Jack.
Let me see if I can make you I want to see if I can make your camera bigger. No, okay, I don't know how to do it. Okay, all right. So let's okay.
So yeah, whenever you walk into our stores, you walk into our produce department. So you'll see like we have berries, grapes, things like that near our front entrance area. So we always want people walking into our produce department. And so you'll see as we kind of walk in, and you'll see the optics of the store. But one of the first things you do is you walk into the produce department. And so our produce department is 100% certified organic. We don't carry any conventional produce. And so as one of the first differentiators from us and our competition is that we don't sell conventional produce. When people come in here, everything they see is certified organic in the produce department, so they can shop the produce department without worrying about picking up something conventional that they didn't realize. And one big thing about our produce is, and you'll get to see here is a great example kind of in our tropical section, but we'll carry things that chain stores won't. Things like pomegranates and persimmons and
let's get a close up, Matt. Let's get a close up. Let's get the camera. Let's see those pomegranates there. Okay, wow, it's a beautiful display.
Yeah, so you'll see here persimmons, kiwi, things like limes, all certified organic.
Okay.
And so, like I said, when you come into the store, you don't have to worry about what's mixed with what, like you are in a conventional chain store.
So you have no conventional. It's all organic. Everything is 100%.
The grocery department and dairy has a mixture of organic and all natural, but produce is 100% certified organic.
Now, Matt, this store, okay, so I'm noticing your store is very different than, typical organic stores, Whole Foods, or anything. I mean, it's very kind of, it's well thought. It's sort of like a stage set almost. I mean, it's beautifully designed. Now, is this like your thing?
Yeah, we like to, I think the word I like to call is industrial chic. So
it is. Yeah, I was going to say industrial chic. Yeah, because you have spotlights. You have spotlights hitting the food.
Yeah, we use spotlights in certain areas to accent things, but then we also have like LED lighting. But I think the biggest thing is you'll see it's open ceilings. It might be hard to see, but it's concrete floors. We use natural materials like brick, reclaimed wood. So you'll see on the walls behind me here, that's all brick and things like that. So it has a nice warm feeling, but also from a construction standpoint, it's very simple to build.
Okay, it's interesting. So this is the aesthetic that basically, I don't know. This is like what millennials love this type of look.
This is our look and feel. Yeah, absolutely.
Is your who's shopping in your store? What's the demographic?
Demographic, I like to say, is two main kind of groups. Is the kind of millennials, so under 35, just started a family, had a kid, worried about what the kid is eating, so now they're worried about what they're eating. They're knowledgeable, so they're online. They know what the latest trends are. And then the other main demographic is kind of, I would say 55 plus, concerned with their health, want to live long, do not want to get sick. And they also like the taste profile of organic. So it tastes like it did when they were a kid, so you win them over with taste as well. But the big thing is the nutritional profile. Like I said, nobody wants to get sick. And, we're all coming out of COVID, hopefully knock on wood. We're kind of near the end game there. People, are refocused on their health, seeing firsthand, you do not want to have a weak immune system. You don't want to be sickly and not eating right, because if something happens, you're susceptible to getting potentially sick.
Yeah. The fuel is very important. So, okay, so the store. I mean, it's an incredible look. Are those ceilings? Are they painted, or are they natural? It looks like it's black, or maybe it's the lighting.
I mean, in this store, we were lucky. They're natural, but we did paint them like a light gray color. And once again, it just goes with our aesthetic. You'll see pipes in the ceiling, all the venting, all that stuff.
It's interesting, because if I didn't know you were in Toronto, I would think this is like, I don't know, in Venice, California, like, or somewhere, I'm trying to think. There's, I've never seen really a store like which has this type of. It makes it exciting. I mean, so it makes it exciting to go. Like, going to a Whole Foods is very boring. A Trader Joe's is very boring. You got those fluorescent lights. It's just boring. Here, you have it's an experience. And I think what people want now is they want to go to part of it is not just to buy stuff. Part of it is it's a human interaction to experience. It's people like markets. I mean, we're hardwired as humans to go to be around other humans. And I think what's happening now, this is crazy. I don't want to go into a tangent, but what's going on now is, plus a lot of people working from home. It's probably going to be a big shift. And people want interaction with other humans, and so when they go to your store, part of it, there's an entertainment value. I think you're adding a lot of entertainment value. I mean, now, how is your pricing? Are you premium compared to competition, discount? Where are you at?
No, we're a value operator. So that is a key differentiator for us. We are a discounter. So we're 18 to 24% cheaper than somebody like a Whole Foods. We're 12 to 15% cheaper than a competing health food chain, and we're probably 8 to 12% cheaper than any national chain. And what I would say is that's off of a basket of goods. It's very important to understand that, because even a small store like ours, in this store, we carry 8 to 10,000 different items compared to a Whole Foods that maybe has 35,000 different items. So it's impossible to say we're cheaper on every single item, because different retailers have different focuses. But our goal always is to provide value on a basket. And that basket is how people shop, and is how you derive profitability in the industry. And so when we consistently shop a basket of goods, depending on the variety, we're consistently shown to be cheaper. And that's our goal. We want to provide everyday value to consumers. We want people to be able to shop organic and all natural and fit it into their budget. Like we say, we're not whole paycheck. We have some fun signage. I'll walk you back quickly, but
I noticed. Yes, you got like this kind of graffiti painted on it. It's very. I mean,
we have graffiti. We have different things. You'll see this fun sign behind me, and so you don't have to shop, and spend your whole paycheck, to enjoy healthier foods for less.
Yeah, well, let me see that display there. What is that stuff on ice? What is that going? What's that?
No, that's just we do cut melons and things like that.
Uh-huh.
People want to grab things.
Can we see
organic grapes?
Matt? Can you do an overhead shot? It's a beautiful display. I just want to see that. Like, I want to get like, okay, wow. Yeah. It's really interesting.
See our berries.
Matt, your look, the way you have the lighting in the background, it really makes the food, these vegetables, it really makes them pop out. They look very appetizing. It's not like, when they're in a traditional grocery store, it's got that industrial lighting. Things look kind of.
Yeah, we do spot lighting to help accent things, especially in produce with the vibrancy of color. So we're in the produce department. You'll see we call out things in our produce department. So you'll see signage up above that says 100% certified organic for less in our produce up above there.
Yeah, Matt, I want to just say like one thing, because I find, I really find the retail business, I just find it fascinating. Like, there's a whole, like, the way things are laid out. There's a whole psychology behind it. And, so to me, I think what you're doing, I don't know if you do this consciously or not, but I think your customer is, they go to your store, they're getting this kind of entertainment value, which is very important. People are willing to pay a premium for that, but you're giving them a discount at the same time. So they're saving money. If they're saving 20%, that's substantial. That's a lot of money, 25% savings. So now they go to your store, they're entertained, they feel smart because they're saving money, and they're getting. I'm assuming it's good food. I haven't tried it yet, so I can't vouch for the. I'm assuming it's quality. So it's an interesting. It's an.
We like to say that the main things for us is you will find everything you'll find in your conventional grocery store plus so much more. You'll find it in a fun and dynamic and engaging environment, and then the cherry on the top is you're saving money. And so it's a three, whammy, so to speak, that we're really winning them over on. And I'm glad you touched on it, Jack, because we don't ever want to underestimate the environment that people shop in. People like a warm, inviting environment to explore in. And we like to tell our customers our stores are built for exploration. It's half joking, but you'll see, markers on the floor to guide people around, because this isn't a store that you run in and out of. It's a store that you want to explore, that you want to be in. And we have a lot of customers that come in and just look at all the different products, explore, read the back labels and things like that as they're doing their shopping, because it's a fun environment. It's so dynamic. And depending on how closely you want to look, the more things you'll find. You'll find things like you mentioned, like graffiti on the wall, where we have fun quotes. Now, some customers won't even notice stuff like that. Other customers will pick up on things like that. And we put these sort of Easter eggs throughout the store for people to find, because it's fun when they get to find them. And if you're not looking for them, that's fine too. But I always like to remind people, from a design and aesthetic perspective, putting a little quote on that on the wall cost me all of $2, like in black paint. So it's a cheap way to have a fun and engaging environment.
Yeah, listen. The kind of the retail, and one of the reasons that I want to give people this demo, that the reason I get up early at 7 a.m. this morning. I mean, you get up there because you got to open the store, but I'm up 7 a.m. Sunday to do this because, listen, I think what you have, look, what makes this unique, and the reason why I see this as a potential super stock, which could be, I think, way beyond 10X, and I'll kind of go into the reasons and all that. It is, you're doing something extremely unique in a very competitive space. I've been to, look, I shop at, whatever. I don't go to Whole Foods because I don't, since they've got bought by Amazon, it's kind of gone like a little bit downhill. But I haven't seen this type of environment that you have I haven't seen this in LA. I haven't seen this in San Francisco. I have not seen this in New York. I'm in Miami now. I don't see this type. So it's to me, this is like really the future of retail. I don't know if you know. Again, I'm not like a retail expert, but what I understand is the most valuable thing that everybody wants to go into is this kind of experiential retailing. It's almost like Instagram friendly retail. People want to have fun. They want to, like you said, they want to explore. I mean, that's the whole thing. It used to be, in the Roman market, people would go from store. That's the way people. I mean, it works that way around the world. I mean, and we don't have an opportunity to do that.
But I think the key thing is, and one thing that we have to remember is, because we're a discounter, we're focused on lean operational costs.
Okay.
So when we talk about experiential, our goal is to create experience without engagement. So we don't have staff to serve you. All our staff are focused on filling the store, keeping it fresh, cleaning it. But you'll notice in our stores, I walk you through, there is no service department. There is no service meat counter. There is no prepared food department. We are a lean labor operator. And that goes back to discount principles. As a discounter, we cannot have heavy labor because that adds to cost. Cost translates to shelf price. So you'll notice that our meat department, when I get there, it's all prepackaged meat. You'll notice any prepared foods we have are all prepackaged, ready to go. There's nobody standing behind a counter making, $15, $18 an hour doing nothing. our staff are busy when they're here, but we do not do service departments.
Okay. I want to get into all that stuff, and I want to see that behind you. Let me see. What do you have in the back there? That thing behind you.
Yeah, so that's our wet case. I mean, they take
Okay.
down part of it at night, but you'll see it's all organic vegetables.
Yeah.
Your kales, your leeks, your celery. But this is my
Great
point:
design.
is
I mean,
at a
really
conventional
is.
grocery store, you're not going to see loose root vegetables. Why? Because at a conventional store, if they don't come back, they can't sell them because the cashier can't tell the difference. So you're not going to see organic celery root and organic parsnip. You're not going to see organic yoga beets, that are striped inside, or white turnips or rutabagas. So these are things, like I said, when we talk about variety in our produce department, it's not just the dirty dozen. We have an A to Z produce department.
Okay. So how? By the way, how big are your stores?
Traditionally, our existing stores are 12 to 14,000 square feet, but going forward, our goal, after learning and building a few of these newer concept stores, we're going to be able to even get smaller. So our ideal goal going forward is around 10,500 square feet. That is the perfect size. It can fit everything that's in this store without any sacrifice. And because we utilize space very well in our stores, we're very creative merchandisers. We don't waste 1 square inch of a store.
Yeah, no, listen, Matt. This is the thing. It's the merchandising. It's like, I think you're like a miniature Sam Walton, a junior Sam Walton Jr. Like this is going to be the future of like what Sam Walton did with Walmart. Like, because the guy had a really well thought out, like, stored, everything was really thought out. I mean, obviously completely different industry, discount, but you could be like the sort of like that of the organic, but for a new age, really for a new age, because your store is it's like a hip store. It's not like like a typical organic place or anything like that.
No, I mean, we don't have that kind of woodsy kind of fake plants and rainfall music in the background kind of organic store. We are a fun, hip, urban feel, cozy market-based environment, industrial chic kind of decor, very cheeky marketing. We've taken elements. I would say we've taken kind of the merchandising and some of the aesthetics from like a Whole Foods with kind of the fun cheekiness of like a Trader Joe's, and kind of merge them with our kind of own beliefs as well. And I think that merger, creates a very unique and dynamic environment.
So here's the thing, what I find interesting is that, once, and you were just saying before, is like, you have a couple of stores now. You have 4 stores now.
We have 4 stores, and right now.
Okay, so you got 4 stores. So basically, you've been kind of dialing it in. You've been kind of experimenting, figuring out what works, and now you're saying that essentially you have this. You have this distilled down to a concept. You can get this into a 10,000 square foot store. So now you have a template which really could be duplicated. I mean, in theory.
Yeah.
Like, what's stopping you from having,
No, I mean, it's a great point you bring up. So we've spent the last, year or two kind of perfecting this new style concept, really massaging it. I'll show you some of the elements that we've added over time as we've worked to perfect the concept to make it cookie cutter so that it can be rolled out rapidly. And so our goal right now is we've kind of gone through that trial. We're renovating our 2 older stores to make it look and feel like this. And we have plans now to grow after going through COVID and understanding the importance of bricks and mortar grocery. There's a real opportunity for us for growth. Absolutely.
Yeah. And listen, it's interesting. I remember when I was like, I don't know, my early 20s, I met an analyst. He was, I think his name is David Lipper. He was basically institutional investors, like retail analyst. Like he was their like analyst of the year for like many years. He was like a top rated retail and restaurant analyst. And I asked him, I said, hey, why do you focus on restaurants or retail? I mean, I'm just curious, like what makes this like, why this and not, I don't know, biotech or whatever, oil and gas. He said, it's very simple. The beauty of restaurant and retail is once you have a concept dialed in, you can scale it up and it's very predictable. So that's once you have like 5, 10 stores or 100, whatever the number is, you can scale that to 1,000 stores, whatever the market can handle, and whatever you, based on management ability to execute. But there is no reason why, especially in a massive country like America, Canada, you have this land mass. It's all, it's very easy to scale out something to thousands of locations. And the beauty of that is it becomes predictable, and investors, institutions, they value that predictability, cash flows, earnings that they can model out, and they can see, okay, let's say Organic Garage has 4 stores, they can have 100 stores. What is that worth? It's like, that's what made McDonald's successful, Starbucks, Whole Foods back, when they were still, before Amazon. So it's an amazing thing.
Yeah, and it's also, for potential shareholders and investors, I would say, it's a simple concept to understand. This is not blockchain. This is not something where you got to bend your mind around it. Everybody eats. Everybody wants to save money. The question is are you on trend? And the bottom line is organics are growing double digits every year. It is the on-trend thing. It is only getting bigger. So we are on an on-trend category here that is in high growth mode. And especially, let's not dismiss the fact that we're kind of seeing the light at the end of the tunnel with COVID, but the renewed focus on health and wellness has exploded.
At the same time, I think, one thing, Matt, I should add is that people think, oh, wow, everything is going online. Listen, the reality is, I think I said earlier, human beings in cities are looking for an excuse to be out in a social setting. They're looking for an excuse, basically. Like, that's what people go to. I don't know, wherever they go, they want to. We're social animals, okay? So they can go to your store and buy the food there and get that entertainment interaction. It's a value. People are not going to stop doing this and just buy everything online, unless maybe they're whatever. I don't know. You have those people, but it's really a huge.
What we see with online is it's either a convenience play, so you're pinched for time, you need something quickly, you don't have time to get to the store, so you order it online. Or for us, especially because we're not at a huge amount of stores per person, for us, we're seeing sales online of people who are outside our geographic area to come to a store. The goal is, as you continue to open up bricks and mortar stores, that reliance on that customer who doesn't have a store in their neighborhood becomes less and less, and they're coming into the store. So that's really the focus on online for us, is either a convenience play or it's accessing a customer that we're not currently getting. So it's an overall boost for us.
Okay, let's see more of the stuff. So we've seen the fruits and vegetables.
So I think one thing that I'll get to this point in terms of a key differentiator for us, and going back to our business model, you'll see behind me, we have a sushi station called Cali Rolls. And so we have a vendor here that makes fresh sushi every day. And so this program is what we call our handpicked partner program. And so this was a program that I developed to bring in vendors who have a specific specialty in something that we don't do. And so going back to my point, we are a lean labor operator. I'm not interested in having staff preparing sushi, nor is it our expertise. I'm not a sushi expert. So what I did is I went out to the market, found a sushi operator, and said, hey, look, I'll give you some space in my store. We'll have a revenue kind of sharing agreement. You provide the labor, the expertise in creating the product. I'll give you space in my store that otherwise would be difficult to find. And we'll have this sort of partnership, so to speak. And so we've identified certain areas in our company that we feel lend itself well to handpicked partners. So one of them is something like prepared food. So fresh sushi. Another one would be, and we had a
Cali Rolls. Is Cali Rolls, is that your brand or is that a partner's name? What does that mean?
It is what we call a control brand. So we've helped brand it. They provide the labor and the expertise, the product sourcing and everything else. And so that way we're not involved with, production schedules. We do not participate in shrink. It is all their business. It's like a little business inside our business.
Okay.
And so another one that we have, so identifying another category, is something like specialty cheese. So we have our partnership with the Cheese Boutique, which is a local operator here, operated by one of our business partners, Akron Pristine, who's a serious cheese guy. And same thing, we said, look, we don't have the expertise to source specialty cheese. We don't have the machinery to cut it. We don't have the labor, behind a cheese counter. But we want to be able to offer our customers a great variety of specialty cheese. So with our agreement with Cheese Boutique, they source and bring in the product. They cut and wrap it for us, so it comes in all pre-done and ready to go out on display. And what we've done is created the area in our store to help showcase their product. And so these sorts of hand-picked partners, we have another partnership with a bakery vendor that provides fresh baked goods because we don't bake on site. So they'll come in and deliver fresh baked goods. We have another partnership with a vendor who provides fresh juices. Once again, because we don't have a juicery in our store. So
where's the juice? You have a juice counter? Can we see that?
It's not a juice counter per se, but they come in and drop pre-packaged goods. So I'll just show
okay,
you
they come in
quickly.
Okay.
So I'll show you, this is our baked good display. They
Okay.
come in and fill this every day. So you'll see there's a selection of things like cupcakes and stuff like that. Things
Okay.
that, we don't bake. It's not our expertise. So they'll bring in fresh pies, cupcakes, donuts, and things like that. And then in our salad bar area, we branded it with the company's branding, which you'll see here. They have a fun floor marker, their Village Juicery. You'll see the side of the case here with we provided branding. And like I said, they provide.
Okay, so basically, so people when they walk into the store, they know that the juices, the sushi, the cheese, it's from reliable brands. It's not like your own thing that you might get at you might just it's not your.
What's great is number one, they're local brands.
Yeah,
so
yeah,
it's great to promote local, and then it goes back to this. Pre-COVID, you heard a lot about food halls. This idea of congregating a whole bunch of brands into one environment for people to explore. And, our stores, I always felt like could be a quasi food hall. While we do the core grocery, could we bring in specialty vendors for people to explore and learn about? And so whether it's Cali Rolls, our sushi operator, whether it's Cheese Boutique, whether it's Tori's Bake Shop for baked goods, whether it's Village Juicery for juices, all these vendors, they get to explore in our stores, almost like a quasi food hall concept.
It's interesting. I didn't think, but this is exactly what you have essentially. It's sort of that whole energy and feel of that of like a food hall type of setup. It's really amazing that this is like, I think one of the things that probably investors might say is, oh, well, can Whole Foods, can they copy this, or can somebody else? I don't think they can, because they're really not getting you and your team. It's the spirit because what's going to happen is this business is going to evolve over the next 18 months. Trends are going to change 24 months from now. You guys, if you came up with this, you're going to have new stuff you're going to be adding all the time. So it's something, basically they would have to have the team. They can't copy this. This is not something where if somebody copies this, they would just have like a stiff, it would not be it would be like a cheap version. It's sort of like fake likes,
Anybody can put a box of cereal on the shelf.
Right.
Number one, do they have the deals to price it well, and what sort of environment do they put it in? And I think it speaks to the business model that we have going back to our discount principles. We have a very rationalized SKU base. So yes, do we touch every category? Absolutely. But I'll show you some examples where within each category, it's highly rationalized, meaning we don't over SKU categories. And what that allows us to do is it allows us to negotiate significant discounts with vendors, pass those savings down to the customer. Because look, I've always said, as anybody with common sense, if you go to somebody and say you're one of 50 rice brands, that's not a good conversation with the brand. They're not valued. But when you go to them and say you're one of 5 rice brands, it's a different conversation. And so we give that sort of exposure in our stores that these brands won't get in a chain store that's 50 or 100,000 square feet, where you go down a rice aisle and there's 82 different brands of rice. We're not interested in that. What we want to sell is we want to sell the number 1 brand, the number 2 brand that spends to be like the number 1. And then we want to infill with specialty, local, and potentially our private label if we have a private label offering, in there.
Okay,
so
let's talk about the business, because obviously the store is beautiful and everything else, but Okay, so you have, and you start talking about earlier, like you have a very, it looks like you have a very disciplined, focused business model of how you're making money with these stores. Like, okay, so let's talk about from a top line. Let's talk about like how much does a typical store generate in revenues?
Yeah, a typical store, the way we normally budget is we want our stores in that, $6 to $8 million a year range. And typically what that provides is depending on things like rent, trickle down of anywhere from 6 to 10% to the bottom line on a per store basis in terms of contribution. And so
Okay,
that's kind of our financial focus going forward. And that goes back to why we really focused on, this sort of smaller store format, because look, overhead costs are considerable. Rent is only going up, in today's economy. So we don't want to take more space than what we really need. So we want a very disciplined approach to the space that we occupy, because that directly impacts, financial, kind of the footprint of a financial, store and what it can contribute. And we want to make sure that we're running things lean so that when the stores are doing what they need to be doing, they're significantly profitable, and so these are the sorts of things that over the last, year or two, we spent a lot of time analyzing so that we can get to a point, Jack, like you said, is get to a point where it is cookie cutter, because you're going to open up stores throughout a geographic area and they're all going to range. Some stores will be high volume, some stores will be low volume. The beauty thing about our stores is we don't have albatrosses. We don't have these stores where they could be significantly losing money. All our stores that we open are profitable. The question is to what degree of profitability, and that depends on, like I said, the store location and things like the rent as outside of labor, one of your
okay.
largest
So
costs.
so okay, so in terms of you have a lot of different kind of like I don't want to say, I don't know if the word is a secret, but you have a lot of unique things where you're able to kind of generate these bigger profit margins and everything else. So one of the things that you're doing is labor is a big problem these days. Everybody's hearing that there's labor it's hard to hire people. People are salaries are going up, etc. So so the thing that you're doing is what you have explain to us your kind of focus on how are you solving that problem.
Well, look, we're a lean labor operator. So to give you an instance, and it's hard to believe when you look around this store, but we can open the store with 3 people, 1 produce clerk, 1 grocery clerk, 1 cashier. Like that is all that is needed. And so when you're talking about lean labor operations, and like you mentioned, we're in a tough labor market right now. We're in an inflationary market right now. I'm very thankful we are a lean labor operator because we can sustain our stores, with a low head count, and still, like I said, be operational, And so this is why I say, one of our core tenets is being a discounter and not having things like service departments and things like that, because it gives us flexibility, in the different markets we're in to not worry about, things like, do we have gaping holes in staffing and things like that. So, when we look at the main input cost of a store outside of food costs, you're talking about rent and labor. And so having a leaner store footprint, helps us cut costs on rent, and then being a low service model where we're not relying on service departments allows us to be a lean labor operator. You combine those 2 things with the cost of goods in terms of the negotiations that we get, and you get to see how all those things trickle down into price for on-shelf everyday low pricing.
Okay, so that's and is that a sustainable competitive advantage? Or is this model? Can you do this across? You're in Canada, right? Can you bring this to the U.S.? Can this this type of thing where you have a lean operation? Will that work anywhere or only in certain markets?
Yeah, look, in any market, you're going to have, when we talk about, let's start off with rent. Our business philosophy has always been to find sites that are what we call B locations with close proximity to A, meaning we want to be close to the A, but we don't want to be paying the A-based rent. And so we don't need to be in an A-based location because our customers come to us. We're a destination. Going back to being a fun, engaging, and dynamic environment, it causes people to want to travel to, explore this kind of space. So when we talk about rent, look, in any market, you're going to have what we call B real estate with close proximity to A. So that's on the rent side. On the labor side, look, every geographic region has different minimum wage requirements and things like that. So it's difficult to say, but within reason, everything is adjustable to a certain extent to at least provide the sorts of things that we're doing at low everyday pricing.
But so in other words, you're able to run like a 10,000 square foot store with just 3 people?
Just 3 people. That's it.
Amazing.
That's all it takes to open a store, and
When
then
you say,
throughout
when you
the
say,
day,
when you
throughout
say,
the day we have more staff coming in, to
oh,
help
okay.
billing and receiving. But I'm talking more from an opening and even from a closing standpoint. When you talk about being able to sustain a store, it's different than saying, well, we need 28 people to open a store first thing in the morning.
Okay.
That would be concerning. So I like to always put it into scale.
Let me ask you
we
this.
can open a store with 3 people.
Okay, so 3 people. Okay, so by contrast, like how many people are required to open a Whole Foods store?
Well, you could start to multiply out 2 people in produce, at least 2 people in grocery, 2 people in meat, 2 people in bakery, 2 people in cash, 2 people in their cafe area, like start to multiply their prepared foods. Forget about their prepared foods. That could be like 5 people, so maybe first thing in the morning, they need to have 20 people, at minimum. So it's a much different scale of operation. Okay. Our business was built to be able to be sustainable on a low revenue base so that you could scale it across different towns and cities, not be concerned about a store losing money, and to be able to sustain itself on a low labor scenario, understanding that, labor is a challenge. And so we want to be able to have stores that don't, require an excessive amount of labor, especially because labor costs are only going up.
Yeah, yeah. Okay, so basically, so essentially your store's 10,000 square feet, 6 to 8 million revenues. And your focus is, you're in cities, right? It's like an urban market.
No, we can be, we're in suburbs, we're
Okay.
in the city. So our 4 locations, we have 2 stores, almost 3 stores in the suburbs. We have 1 store in downtown Toronto. But the beauty about the concept is it's a suburban play, it's an urban play, it translates anywhere.
Okay. I guess people, wherever they live, they still have to eat, right? They have to buy food.
Yeah, and look, what we've seen in suburbia and same thing in the urban setting, it's like you touched on it. There isn't a store like this, you're not going to find this. It's a very unique concept. A lot of Canadians jokingly think that we're American because of how unique it is and different it is.
No, I would not think. I mean, I don't know, but definitely the whole branding, the whole thing. I would have thought that this is because this type of thing really starts out in a place like California is really where concepts come out of. Whatever, that's just the way it is, right? So I would have thought this is something that was launched in, I don't know, Venice, California, LA. Somewhere, whatever it is, you got guys coming in on skateboards like off the beach. It's really very, very interesting. So your market, so you can do these in suburbs, cities. It doesn't matter.
It doesn't matter, and you are right. I mean, look, the West Coast is the epicenter of the organic and natural kind of movement. You guys have California here. We have British Columbia. So it definitely people would think it has that kind of West Coast kind of vibe.
So all your for now, all your stores are you're in Toronto. They're all in Toronto area?
We're in Toronto, in the greater Toronto area, and that's our focus. And we feel, here in Canada, Ontario is our largest population base.
How many people do you have? How many people are
in Ontario?
Yeah.
Good question. I think we're 8 to 10 million in Ontario.
Okay, so good size. Okay.
So it's definitely the largest population base, and so Ontario easily has the ability to support 20 to 30 organic garages. So there's lots and lots of runway for growth here.
You're saying this market in Ontario, you can have 20 to 30 stores?
Oh yeah. We've done mapping with our real estate company who represents us, and we've identified that easily could support 20 to 30 organic garages. And look, from a scalability standpoint, here in Canada, when you talk about, major chains, it's a little bit of a different dynamic than in the US. For us to get to 20 or 30 stores, we're a really big player in the organic and natural market. To put into comparison, Whole Foods in all of Canada, I think they have 12 stores, different than the US where they have like 450. So when you're talking about becoming a dominant player, the step up is not huge. And so this is why I'm so excited, because we have this unique opportunity to really grab a significant amount of market share, with this sort of concept, and become a market leader in Canada, just by dominating, our home province here in Ontario.
And essentially, so what would it take? What would it take for you to take this concept that you have right now and cookie cutter, duplicate this, to 100 stores, or let's say even 25 stores, even outside of Toronto? I mean, outside of Ontario, can you open up in Vancouver, then go down to Seattle?
Oh yeah,
you might want to skip Portland for now, but you'll go to Texas, etc.
Yeah. Look, there's tons of potential, obviously, in Canada. Look, I feel, I mentioned Ontario, the West Coast, but even from a US or a European standpoint, the beauty about concepts like this is once you've perfected the business model, and like you touched on it, Jeff, once you've created a model that can be duplicated over and over and over again, it can easily be licensed to other operators in different countries, different states. All sorts of opportunities exist. And so what we've spent a lot of time on is, who are we as a company? What is our brand? How do we communicate? Because those are things, like you mentioned, you can't easily duplicate. It's how we speak to the customer and that sort of authenticity. And so what we've done is, I don't want to say we patented it, but we patented it in terms of what that means for Organic Garage, so that if opportunities come up in places like the US and different states, and you were to meet, an operator, we can license the concept. There's partnerships that you can strike. There's so many things that you can do now that we've perfected the concept that allow endless growth for the brand.
I want to add something. It's because back to the retail restaurant. McDonald's, right? The genius of McDonald's. Ray Kroc, the reason he bought McDonald's was, there were millions of burgers, burger fast food places in the U.S. in the 50s, millions. Many, right?
Yeah.
What McDonald's had was they had a system. They had systems in place, and that was the value of it. He basically bought McDonald's for the systems, the whole thing. And what you have is these systems in place, which, let's say you get to 20, in theory, you might get to 20, 25 stores, and you might have, Amazon might say, shit, I'll give these guys $2 billion because I can take the system, global. Actually, Amazon is the wrong, because they bought Whole. So somebody, whatever it is, it's a very valuable thing. So in other words, because of the margins, you have your profit margins are above the industry normal.
Oh yeah, we hover in a 28 to 30% gross, which is very high for a discounter. And remember, we're a discounter, so we work very hard, in terms of working with our vendors and making sure that it's sustainable for all parties. But we want to be priced aggressively, and because of our lean labor operations and stuff like that, all that stuff contributes. So yes, we have very, very sustainable margins. And look, going back to your point about McDonald's and going back to the franchise model and kind of patent systems, it's the one beauty about, for a lot of large franchises in particular, when they're looking at operating out of country, out of, their home market, they go to a licensed operator who knows their home market, because then the scale is much faster. They can duplicate much faster. And that's why, just touching on your point, the opportunity for Organic Garage by having a system in place, something that we spent the last couple of years perfecting, knowing our branding, how a store is supposed to look and feel, what are the sorts of things we need for a store when we're building a store, what are the things we know we don't need. By having all that predetermined and understood, the ability to scale becomes much faster. And so whether that's in our home market, whether that's outside of our home market, the potential is there. And whether it's us that looks at expansion, whether we find a partner in another state, another country, all those sorts of things.
There's a lot of, but Going back to the systems. I mean, I'm assuming everything that you have is extremely well thought out. You have like things in binders, you have systems, you have like stuff where
We got lots of binders.
you have data, you have all sorts of stuff where basically, so the value of what you have. Wait, okay, so how many shares outstanding? What's fully diluted? The company, what's the number of shares out right now?
We have, I think, a little north of 55, 56 million shares outstanding. And remember, that's after our acquisition, which I'm sure we'll talk about in the future of cheese, which we did earlier this year. But yeah.
Wait, so your market cap is like under $20 million?
Yeah.
Canadian.
Yeah.
This has got to be the most undervalued stock, like, on the map. Because basically, I mean, the value of what you have, let's say for a major operator would be, I mean, they see this as a strategic value. Forget about the number of stores, because listen, what you have, once they have the system, once they got you guys, the team, they can duplicate this. They could to 100 stores in a year. Somebody could do it, right? They would be willing to pay a couple hundred minimum.
And it is hard to comp, especially because
what you have is a unique thing. It's like, listen, when Ray Kroc bought McDonald's, he paid I forgot, but it was a premium. It wasn't like, hey, I'm paying 1 times X because that's what a burger stand. No, it's a premium. And I'm using the McDonald's. It's an old example. The value in today's market for what you have for like a major international, somebody who wants to get into this demographic, because when you're targeting really the future. You're really the future of the of at least North America. It's the millennials, because they're having kids now. They're starting to have kids. They're going to be eating more food. And then you have 50+ people. There's more of those guys, right? So the market in Europe is such a desirable market that it's nothing. It's nothing to pay. Even $1 billion. I mean, $1 billion might be too much, but even now. 250, 500 million for the concept. But look, I'm assuming you're gonna keep expanding. So my question is, what do you see as how many stores can you get up to, like, in the next? Can you get to, I don't know, how long would it take you to get to 100 stores? I mean, what's stopping you from getting to 100 stores?
Well, it depends. I mean, there's a lot of things that have to come into play in terms of real estate availability and things like that. And look, we want to be very, cautious with our approach, making sure that we're not doing things, like over diluting with our existing shareholder base, but we want to take advantage of opportunities. And we definitely see there's an opportunity in the market. And going back to your growth point, Jack, because it is a good point, a lot of companies pay for potential. It's not about, where you are currently, it's where they want to take you over the next 5 years. And I think it's important for, people who are watching this to understand that all the growth in grocery is in specialty. It's either in ethnic grocers, catering to specific ethnicities, or in specialty natural. And that is precisely the market we're in. And so, businesses evaluating us are not necessarily evaluating us where we are now, even where we are or where we could be in a year from now. You're right. They're taking a look and saying, look, how can we scale this business to 100, 200, 500 stores? What could we do with the brand? Because the one thing that we spend a lot of time on, and the one thing that has intrinsic value, is the brand.
I love the brand. I mean, I love this, but Organic Garage is such a great name, because it's just organic. It's just, the name sound to me is like, okay, it sounds like you're getting a discount because the stuff is sold in a garage, but it's kind of fun. It's kind of like, it's just one of these great brands. I'm actually shocked that you actually have this brand.
What we found is it's very memorable, because the word organic and the word garage don't seem to go together.
What's the word?
Like a yin and yang. Yin and yang. Yeah, it's almost opposites. But look, we want to be edgy. We want to be different, and we want people to be memorable. And it's a memorable name.
Matt,
we've seen it over and over again.
I want to touch on something. Okay, so in order to get to 100 stores, obviously, people think, investors might be thinking, oh wow, it's going to cost a lot of money. There's going to be dilution. I don't think there's really any dilution, because when you're talking about the business you're in, first of all, there are specialty lenders in the space. So like you're not going to be, first of all, let's talk about how much does it cost to open a store like would you have, like a 10,000 square foot store?
Yeah, typical 10,500 square foot store, you're talking maybe 1.5 to 1.8 million all in. That includes inventory. And I think, so a couple of things working backwards from there. So the
inventory, you get a credit though.
Yeah, so
or
inventory, yeah, typical for new store build is all our vendors provide one free case of goods to help stock the store. You know, our growth is their growth. So they want to participate in that. The way they do that is providing free products. So from an inventory standpoint, as much as we might say we might have, you know, $150,000, $200,000 worth of inventory in the store, we get that back in terms of credit. So that comes right off the top. And then so you start working backwards from there. So figure a couple $100,000 right off the top, you're down to 1.6 million, let's say on the high end. Then off of that is we always negotiate significant landlord inducements when we're negotiating our leases. Why? Because landlords want long-term lenders and they're long-term tenants, and there's no better tenant than a grocery store. They are
and you're high quality. You know, okay, I want to talk about, you're a high quality tenant because you're an anchor tenant, which adds value. You're a value add because it's like a hip store. It's not like a typical Whole Food. This is like something fun. It's going to drive more people to that.
And we drive a certain clientele to a development that is very attractive as well. But you're right, grocery stores drive a tremendous amount of value. They bring incremental tenants like
you're beyond the mere grocery, Matt. You're beyond the mere grocery. What you have is like the store has like a spiritual quality that you know it has a value. No, I mean it's a sexy brand. It's not just it's sort of like a listen, it's why do people buy the Apple phone? There's other phones, right? I mean, I think you're using a BlackBerry. What I understand, people buy. They want, why does somebody buy a Porsche or whatever? They can buy a Toyota.
A cult following, absolutely.
It's a thing. It really is a very unique thing. So how much hard cash would it cost to open a store if you really get all the inducements, everything else?
Well, so just going back. So right off the bat, you get your inventory back. You have a landlord inducement anywhere from 250 to 500,000. You're down to around $1 million. And then you're right, in terms of accessing specialty lenders, there's lots of lenders who lend on equipment. And our goal was, at least for the interim, to utilize that avenue to cut the cash out of pocket down to, between $500,000 and $700,000 a store. That is our goal.
Canadian. That's Canadian dollars. It's Canadian dollars. So
that's Canadian dollars as well.
Okay, so let's say it costs you $500,000 to open a store. That's nothing. And basically the store pays back with, I would say you'd be profit. How long does it take to break even on the store to go profit?
Well, using our math or our deal kind of financial model is in that $6 to $8 million a year range. And depending on what the rent is, it's a 6 to 10% contribution margin. You do the math, even at, 8 or 10 points on 6 or 7 million, you've almost recouped your investment in a year. So the return on CapEx is very quick. Okay,
so within a year, you've gotten the money. Okay, so and even at $500,000, you could probably, the whole thing could be financed because what you have, it's not like some speculative thing. It's a very thought out process where what the margins are. You've modeled out the demographics. How many based on when you pop a store in, what the surrounding demographics are. How much you could
and things like that. Look, we're going to be very careful in terms of, capital raises. For us, it's can we accelerate expansion? And if we can do that and there's an opportunity, then we're going to take advantage of it. But we're going to be very cautious. We're going to be very cognizant. And we're not interested in over diluting any more than we absolutely have to.
Okay. So bottom line is, for an investor, they're looking at this. if Warren Buffett was looking at this, he would basically buy you guys. You're not quite big enough, but the model is what he would buy. So if you had 50, I think he needs like 100, or these days it's $1 billion, but 100 million plus. So let's say, okay, so you have this unique thing. So $20 million, you got 4 stores, and how much are you doing in revenues right now with the 4 stores?
We're doing between 25 and 30 million across the 4 stores.
Okay, so the stock is trading at less than 1x sales. Normally in this retail space, they're trading at 4x minimum. Specialty retail?
Yeah, it definitely depends. But look, the kind of comps go out the window when you're in growth mode.
Yeah, yeah, yeah.
So it's not something you're not comparing against incumbents who
Right.
have been around for 50, 80 years and have kind of reached their zenith in terms of growth. So we're a growth story, whether it be
People
on the
basically
OG side or
yeah.
yeah.
So this is something where I could see easily the brand itself. I mean, the brand itself, the whole concept is minimum, even with the stores. I know it sounds crazy, but it could be way north of 100 million because I mean, it's a tremendously valuable concept. So
Oh
there's,
yeah.
I see this as something where built in, somebody who's buying the stock now, built in right now, they get like a 5x upside based on just the value. They're getting a brand that's undervalued, right? Then obviously,
Oh,
you got to execute. So
undervalued and a growth story. And look, everybody, as well as I do, the public market.
You're the Tesla of organic food, basically.
Yeah.
It is. It's like a Tesla of organic food because
But you know
you're
what?
basically.
It's a great example. People invested based off of where the brand could get to, and now people are seeing, after many years of hard work, they're there and they're seeing the value being returned. So a growth story is much different than something that has stagnated and things like that. And so the comp can go completely out the window. Yeah.
Yeah, let's see the rest of this. So what's this behind you? Is that like coffee or something, or what is that?
No, so look, we do a lot of self-serve stations.
Okay.
Bulk is a big thing. Zero waste movement
Okay.
has continued to gain popularity and a lot of news in the media. So we have different stations at the store. This is for bulk olive oil and vinegar.
Oh, wow.
You'll see in the background, I think you can see it there. We have our bulk food section, where people can shop and grab nuts, seeds, dried fruit, grains, candy, things like that. We have right here, you can fill up water jugs for reverse osmosis water and reuse your jugs. Even things like bulk teas, herbs, spices, and things like that. So we intermix these things throughout the store. The same thing. This is creating engagement with customers without having service, without having somebody stand there to serve you. But yet it creates engagement with customers with people filling up bags, filling up bottles, things like that. So it all creates engagement in the store. And so you'll see, like I'm walking through our grocery department right now, and you can see all the aisles, but we are an A to Z shop. Like we're covering every category. I'm in our pasta section with pasta sauces and stuff like that. Over here, our flour section, all our baking goods and things like that. We have a great example, touching on our private label. Here's an example of one of our private labels. This is our private label kitchen originals coconut oil that we have, and on this end we have our private label canned tomatoes.
What is it? What is it called? It's organic garage label.
Yeah, so that's our private label. So we created a house label, and just going back to value, the value in this brand alone. We didn't brand it organic garage because we felt that this brand, we could potentially even sell this into other markets. It is such a great brand. It is so unique in terms.
What is it called? Let's see that thing. What is that?
Yeah. So it's Kitchen Originals.
You came up with that name?
Yeah. So we came up with that name. It's our brand, and so like I said, that can be.
What is that product? What is that product that we're looking at? The Kitchen Originals. Sorry? What is that?
Well, this one is canned tomatoes.
Tomatoes, okay.
Yeah, canned tomatoes.
Like the Italian tomatoes, like for the sauce.
Yeah, yeah. And then coconut oil. We have our private label over here. Our private label rice cakes. And our goal with our private label is always to be the price leader in the category, or to deliver the best quality at the best value. And I think that's an important differentiator as well. So those two things. So you always find our private label intermixed into different categories. Like I'll give you an example. Like we're in our rice section. Going back to my point about not having to have 50 brands of rice, we have the major brand. We have a couple of other options. We have specialty, but then we also have our private label. So this is.
Can I see yours? Can you bring it up to the camera?
Sorry?
Can you bring it up to the camera?
So there's our Kitchen Originals. Right.
How much does that sell for? What's the price on that?
So that is $9.97 for a 2-pound bag.
How much are the others?
It depends. These are usually smaller bags, but these alone are $9 for a 1-pound bag. So, our goal with everything is to provide value within the category and give customers a recognizable brand that they can see throughout the store in different areas and immediately recognize and trust that the brand's reputation and quality and value is there.
Kitchen Original is also such a good name. It's like you guys come up with these great names.
Yeah, and the tagline is "Eat like a chef for less." We want people to be able to eat or utilize items like a chef would, but at value. You know, so you don't have to break the bank and buy and spend tons of money on gourmet items to eat well. You can access our brand and be an original in the kitchen. That's what we want people to be that inspiration in the kitchen, utilizing our ingredients, which are high quality organic ingredients at everyday low prices.
Matt, you know what your problem is, that you're in Toronto, because if you were based in California, if you had 4 stores in California, this would be minimum of $250 million valuation as a private company.
Yeah, it's unfortunate. Look, small
Because
caps are
people
never
would
easy.
they would say, "Oh shit, we're going to scale this out. You're going to have VCs all over you. It would be crazy." So this is like people. This is like a gem that people can pick up right now. That's still okay.
So you'll see, you know, looking down, this is our frozen department, but you'll see we do fun decor things. It might be hard to see, but we installed a scaffold inside the store. And so this is just repurposing items. So we bought used scaffold, repurposed it in the store, going back to being environmentally friendly, and created a unique, engaging environment where you shop, you know, underneath, you know, so you can see, you know, I'm underneath here, you know, for our frozen doors. And that's just trying to be creative and take what is usually a very ugly thing, which is, you know, lines of doors, and creating an environment.
Okay, so you know what it is? I gave the wrong metaphor. Really, you're like the Disney of organic foods, because, you know, Disney, they're very, very well thought out of, like, every little thing, like the experience, it's incredible. They go into things in incredible detail. They have teams of creative people who come up with this. Like, who is your team that comes up with all these things? Because basically, you're like a Disney type of thing of food. That's what it is.
Yeah, look, our staff are very creative, and in general, so am I. You know, like, a lot of this comes from my own belief about the experience I want for customers to have in the store, and how do you engage with them without service. And I keep going back to that, because without having people that are serving and things like that, you have to create elements. And I'm glad you mentioned Disney, because I've always equated it to like little amusement rides in a store. Like, how can you have a little roller coaster in the store for somebody to experience? And if that's walking underneath the scaffold, if that's seeing a fun quote, if that's engaging in a bulk display, they're all like little roller coaster rides in the store that keep people engaged in the environment. And I think that going back to your Disney analogy, you know, it's great. Look, I'll touch on something else. You know, when we could talk about, you know, unique things in our store, you know, we have this coffee machine. We call it Express Brew. This is something we developed because, same thing, we don't want to have cafes with somebody standing.
Let's get it close. Let's take a look at that. Let's see the machine better. Walker. So what is that?
So we call it the Express Brew machine. And so people can come in, they can grab a hot cup of organic coffee for $1. They can get specialty beverages like hot chocolate and things like that. But the whole purpose is we're not paying a staff member to stand behind a counter to serve you. This is a self-serve station. Customer goes up, dispenses the product on its own, and gives you a high quality cup of coffee or hot chocolate or a specialty beverage for you to enjoy while you're shopping in the store. Same thing, we have another one for hot tea called the Tea Box. So you can come here, grab a hot tea, you select
That's a self-service machine?
That's a self-serve. You pay for it all on its own.
Can you zoom? I want to see what's the stuff on top of it. I can't see. Okay, so what is that?
Those are loose tea leaves. So there's a selection of loose tea leaves. You pick your blend, and it dispenses the cup of tea while you're here in the store, so you can enjoy.
You don't have to brew it yourself. You push a button.
Sorry?
You push a button and it does it for you.
You push a button, it does it completely on its own.
You don't have to mess with it.
We don't mess with it. There's no staff member that has to serve you. There's no staff member that has to help you.
Let's look at the machine. That's a cool machine. Where do you get these machines? They sell these? Like, I didn't know this existed.
Well, you don't. This goes back to our local partnership. So I found the founders of this. I had read an article about them, and once again was looking for unique things to as we were developing the concept and perfecting it, to find sort of unique things for people to engage with. And I didn't want to do a traditional cafe in our store. So it was, how do I provide things like coffee and tea to the customer without having somebody serve them? And so I was looking for machines that would automate the process. And I found the guys who created this machine and signed them up. So it was great. Another area we have is our draft station. So it's our on tap station. So I like to say it's not beer. We get a lot of people who think it's beer, but what this is people can come in, they grab one of our branded bottles, they fill it up with kombucha, they'll pay for the bottle and the fill the first time, but the goal is bring back the bottle to reuse. We want to be environmentally friendly, and just pay for the refill. And so people come in and they can grab a selection. We have 12 different types here.
Wow. I mean, and who can, I've never seen this type of thing. This is like your invention, this type of tap, kombucha tap?
Yeah, different stores do it, and some stores have tried, and some stores, maybe don't do it. For us, once again, going back to your analogy of Disney, this to me is like a roller coaster in my store. It's a fun, unique attraction for people to engage with that doesn't cost me anything in terms of labor, in terms of servicing. Because once again, I'm not pouring the beverages for them. The customer is doing it themselves.
People want to do it. They want to interact. It's it's interesting. I said before, like you're like a sale. You're not a sale. It's really, you're like the Roy Disney of grocery, because it's all about these experiences, these fun experiences. People like for people who are like they could be millennials, whatever, but people that want to go to a store, they want to. Yeah, it's entertaining. All the stuff you have there, it gives them a reason to go there. It's probably, if you're in cities, it's probably a good pickup scene. It's probably guys going there to pick up girls, because this is like this is a good they're getting how it works Matt.
But just going back to our full offer, so we're an A to Z in grocery. We have fresh meat, we have dairy, we have bakery. We're everything from cans of pop to pet food in our grocery. But we also have vitamins and supplements and health and beauty. So I like to show here, here's a great example of, health and beauty items, shampoos, deodorants, toothpaste, all that sort of stuff. But then also, a full vitamin complement. And we don't hire specialists on staff. Our belief has always been, when it comes to vitamins, go to your doctor, go to your dietitian, go to your nutritionist, naturopath. Let them advise you, because they know what's best for you. But then come to us, because we're going to have the best price on shelf. What we don't want to do is, we don't want to advise people. We don't know your health story. We don't want to recommend something. And look, I always remind customers, there's all sorts of deals that vitamin companies give to sales staff on floors to help push product. We don't want to be like that. We don't want to be like a used car salesman or something with people's health. We want people to go to their, person that knows their health background, recommend what's important for them, but then come to us, because we're going to have the variety and selection, and you can see. So going back to our point is, we are an A to Z shop. We've been able to curate our offer to offer our customers, anything they could possibly need to cover their shop in the store. And you can see it by, the variety that, you can see in the background. So yeah, and you'll see, like, too, just going back to our decor and stuff like that, even on front cash, because that's where I'm by.
Yeah, let's see the checkout. Let's see the checkout register. What do you got going on there?
Yeah, you'll see like how fun and the colors and everything, and we make it bright and vibrant and engaging, and everything, even from the you can see here the numbers on the tills, that light up when the cashier is on till.
Oh yeah, how does is there any way you can press that so we can see what it looks like?
You want me to turn it on for you? Okay. Yeah. You see, there's where am I here?
And are those bulbs? They're like bulbs, right? You have the
so it's the bulbs. So it's
the old-fashioned bulbs.
Yeah, exactly.
I can't see it because of the light, because of the but I know what you, it's like the outside of this. Okay.
Yeah, so you'll see the number 2.
Yeah, no, but it looks, actually, the bulbs, it makes it look, on camera, it's not showing up well. But
as the individual bulbs, but yes, it is. You're right. It's individual.
Like the old-fashioned bulbs.
With the filament. You can see the filament inside. But yeah, we do fun things. And going back to my point about vitamins, and when we talk about our brand and how we talk to customers, here's some great examples of signage in the store. Where we talk about, we aren't vitamin and supplement experts. And I'll show you, quickly, just because you're right. Decor and things like that are so important, but I'll show you some fun signs, that we put up in produce. And I think everybody will, talking about cell phones and stuff like that. But here's a fun one. If you can see that, life was much easier when Apple and BlackBerry were just fruits. So look, we want to have fun in our stores.
Right.
We want people to have fun when they go grocery shopping. We want people to engage in the environment. We want people to explore while they're here. And we want people to feel that they're getting value when they shop here. And, our value proposition is, what is so compelling, because people can shop and eat organic and not feel like they're breaking the bank. And it's unfortunate because certain retailers cultivated this image of organics as being elitist. And what we want to do is we want to democratize organics. We want people to be able to buy products like this and fit it into their budget and not feel like it's out of reach for them, because it's not. It is not in a store like ours. We want people to be able to shop every category and enjoy anything, organic and all natural, and not have to sacrifice and buy products that are potentially not great for them and not good for their health because they're concerned, I can't afford it. Well, you can't, because we have deals going on all the time, whether we have our flyer special. So, this is a great example. You'll see our flyer tags here. So this is our unflyer that we publish every 15 days, to provide deals to people. We send out an e-flyer, but then we have in-store specials going on. We have manufacturers clearance deals. We buy short code dated product to provide extra value to customers. Or we'll buy items that are coming to code. Here's a great example of, manufacturers clearance tags and stuff where, people can save 75% off regular price, or 80%. So we have all these deals coming in and out all the time for people not only to get great pricing on shelf every day, but people to buy product. They can buy products on flyer. They can buy manufacturers clearance. They can buy in-store specials. They can buy short code dated deals. Anything to provide extra
Short
value
code.
to
What does that?
consumers.
What does that mean for? What does that mean? Short code means what, stuff which is close to expiration, or what does that mean?
Yeah, vendors overproduce. They say, look, we have a month left. We need to get rid of it. We don't want it, going to waste. Can you help us out? And we get calls all the time, because when manufacturers are producing, they're basing it on projections and things like that, and things can change. So anytime we can pick up on a deal and pass the savings on to our customers, we absolutely look for those opportunities.
No, it's important. I mean, if somebody can get great savings, I mean, the product is still good for, a couple months, so it's fine.
Oh yeah, absolutely. Here's another private label product. This is our Kitchen Originals certified organic sparkling water.
Can I see that? Let me see that. What is it? Hello carbon. What is it?
That's carbonated. So this is our organic lemon flavor.
Let bring it up to the camera so we can see the label. Hello, my name is. Okay, it's
yeah.
fine.
So it says carbonated spring water, but it's sparkling.
How much do you sell that for? How much is that?
These we sell for $197 for a 1 liter, which is just an unbelievable price.
How much does a regular stuff sell for?
It could sell for double that for a 1 liter. And remember, it's certified organic flavoring. So this is not conventional sparkling water. So
so this is not like this is not like sugar and like chemicals.
There's no sugar or anything like that. So
that's a good deal.
So
let me ask you a question, Matt. Very, very important. I mean, we're talking about the stores and everything else, but within this business, you really have a couple of other hidden, valuable gems. Like, so you have this private label business, right? Kitchen Originals. You can sell that at other stores.
Yeah, the beauty, and look, there are some chains that do that with their private label. They'll sell it into independent grocers in different markets. But it was something that I always thought when we were developing our private label was to develop a private label that had a brand that was differentiated from our core brand, because I thought there could be potential to sell it internationally into other markets. I was talking to some people recently, and people, I think, underestimate, the reputation that Canadian products have internationally for being top quality and trusted. And so having a brand like that coming out of Canada that people can trust in potentially an international market, is something that could, have tons of potential. Absolutely.
Okay, so basically, so the Kitchen Originals is a brand that you could, in theory, it could be licensed, and you with controls, you could have it in the U.S., whatever it is. You can have it produced in the U.S. also, and sell it locally to other chains. Yeah.
Yeah, look, we could produce it using our existing partners, and we just ship it in. But the beauty about it is it's a house label that you will not find in other retailers other than the retailers we sell to. So for retailers that are looking for unique brands that they don't have to develop themselves, they could come to somebody like us and say, hey, look, we'd like to carry your Kitchen Originals brand in our chain of stores because we know our competitors won't have it. You're not in our market, so you're not a competitor. So, hey, look, could we purchase the brand from you and sell it in our stores?
Okay, so
there's lots of businesses that do that.
Okay, so in theory, I mean, even a Whole Foods or whatever, or even, I don't know, like whatever stores are in the U.S., they could buy your Kitchen Originals, the lemon, the soda.
Oh yeah, they could buy our sparkling water. They could buy our coconut oil. They could buy our.
So sparkling water, let's use that as an example. So the bottle retails for $1.97. You have enough margin in there that you could, sell it to other stores?
Oh yeah. Okay. Private label traditionally is, and why retailers do it is, it's a margin enhancer. You're going to gain margin than selling a branded product. And the thing about private label or anything you manufacture is it's all about scale. The more you produce, the better the price you get. So, there's lots of room for growth in that.
How big can this be? How big can this private label Kitchen Originals? I mean, you have some pretty interesting products. I don't know the whole product line, all the SKUs, but in theory, what's in your way from going to $1 billion in sales? Selling that U.S., Canada.
Oh well, there's infinite potential. Like it's not something I don't want to say that we've been focused on developing our stores and things like that. So it's not something that we've necessarily focused on looking at licensing or selling into additional markets. But the potential is unlimited. Because a brand like that is very easy to transport anywhere across the world.
And you also have one thing. I know that one of the things that you have that you've developed is this the cheese business, or future of cheese, which I think is going to be one. I think it's something we're going to be talking about more in the future. But maybe let's talk about that a little bit now. Maybe you could talk about, just give us an example what this is all about.
We can talk about the potential in the bricks and mortar grocery business, but one thing that shouldn't be underestimated is the acquisition we made earlier this year, which was for a plant-based cheese business called the Future of Cheese. And for anybody who's in the investment spectrum, you have to know what's going on in the plant-based.
Everybody, yeah, I know. Listen, I know investors. That the hot theme is the vegan foods, all the organic, all that, the cheese, this. Okay. So I want to say that for another interview, because we're going to have a lot of people in the audience, and I know we're going to have a lot of questions for that. I want to do that at a live stream because everybody thinks that this vegan stuff is going to be which I think it is. However, I really believe what you have with this alone is this is like $1 billion business. That's essentially like it's like an acorn. The tree, the oak is going to come out, but what you have right there is the $1 billion acorn right now.
The organic garage business, just the growth potential is tremendous. And you're right. Look, we could spend a whole episode talking about the plant-based food sector and what we're doing in it with Future Cheese. And so from an investor standpoint, not only do you have this, as what our business is, but we have that whole other side being the plant-based side, which is on trend. And just going back to my point is organics and natural, it is on trend. It is hot topic. Add in the plant-based side, another hot topic. You know what? We're moving and shaking in terms of what we're doing, and it is a super exciting time.
So, okay, so I want to save the vegan stuff for a later a live stream, but just to give people an idea, I'm thinking. So you have right now, you're starting off with a cheese brand, and we'll talk about why, but is potentially, because look, your expertise is in, what sells is the bottom. You understand what sells on shelves and everything else. do you see yourself developing, and you already have this kitchen originals, do you see the organic garage as potentially being like a development lab almost for new brands in the vegan organic space? I mean, and if so, like what makes you like, what gives you like a competitive advantage in doing so?
Yeah, look, I like to say we're at the ground floor of seeing what trends are going on. So for us to acquire a CPG brand like we did with Future of Cheese allows us to provide the insight and guidance to that company about what customers are looking for, what are they not looking for, what are competitors doing, what are price points like, all the inside knowledge that a brand off on its own just doesn't have access to. And so we have the ability to provide that insight and guidance and expertise to help grow the brand, take advantage of the opportunity that's going on in plant-based. And the opportunity is huge. It is huge. Anybody who's following, what's going on in the stock markets, whether it be the Beyond Meats of the world, everybody knows plant-based is a hot on-trend topic. You're absolutely right. We'll definitely cover that in future kind of.
What's also interesting is the whole thing with plant-based. There's again, it's all of a sudden it's becoming this multi-billion-dollar. It could be it could be a $1 trillion valuation market now. But if you add up all the companies between the Beyond Meats, all the stuff, all the Oatly's, all the stuff. The reality is though, there's really no dominant brand. It's such a new market. Nobody has really developed a Coca-Cola, a Coke or vegan. There's no Coke. There's no like Campbell's. You don't have that yet. It's still early stage. So you can develop vegan. I mean, it's the market is really wide open. It's like the Wild West.
It is wide open, and there's lots of opportunity. But what is going to separate each of the brands is the product being put out, and that's what sold me on the Future of Cheese. And we'll talk about the management team and everything. You're right, in future episodes. But the management team and the people who developed Future of Cheese are second to none. They are experts in their field. And so when you're talking about taste profile and all those things, the Future of Cheese product is second to none. And that is what is going to differentiate the so-called posers, if we want to say that, from the legits.
The posers from the closers.
Yeah. So yeah.
All right, absolutely. Matt. Let's wrap it up. Speaking of close, let's get a shot of the outside of the store. Let's go through the cash register. I want to see the outside because I want to see the outside of that store because it looked pretty, but it was too dark when we started. It's already.
Oh, you want to? Okay.
The sun is already up. So 7:30 now. 8:40 a.m. right now.
We're getting close.
You're going to be opening, right? You have staff coming in now, right?
No, we're getting there, but
okay.
But yeah, so you can see the vestibule a little bit better now that it's light out. You'll see that's
okay. Let's go outside more so we can see the whole.
We call our stores, and have a name for it. But yeah, you'll see, our gorgeous. We try and do patios in all our stores. So you'll see our beautiful outside of our store with our patio, our landscaping.
And where is this? Where are you? Is this a suburb? What location? Where is this?
We're in the west end of Toronto, and you can. I think you can see it in the background there. Can you see the CN Tower?
Oh yeah, vaguely. Okay. So this is like a suburb of Toronto?
Yeah. So we're probably 10 minutes outside the core, but like I said, you can see. I think you can see the CN Tower there in the background.
Yeah, tight a little bit. Yeah, I could do.
Yeah.
Do a little bit,
yeah.
Okay.
So yeah, no, it's a gorgeous building. We work on the decor of even the outside of our buildings because we want people to experience,
this is
what we're all about, even from the outside.
This is a freestanding building?
This is no, we're in a plaza with a gym and one other tenant.
Can I say, I'm just curious, can you give us a tour, like a little more of the location? Maybe can you turn around, maybe see the rest?
So you can see it's got a great parking lot. Okay. Lots of parking,
Okay. One thing which is interesting. Let's go back to the store. I don't want to speak. The parking lot is boring. Okay. But one thing which is interesting, you talk about, the opening locations, scaling up to more stores. I think it's worth noting that right now, landlords are desperate. They're desperate there's a lot of space. There's a lot of these 10,000 square foot spaces that are available in urban markets.
Oh yeah, absolutely. And I think, it's unfortunate with what's happened with COVID for certain industries, like the restaurant industry and certain general merchandise businesses. But look, we can take space that was formerly occupied, by a large restaurant. We can take space that was formerly occupied by general merchandisers. And what I love about the 10,500 square foot spaces, I always like to say, we're too big for the small guy and we're too small for the big guy. So we're not competing against big guys for space because it's too small for them. And we're too big for the small guy, so we're not competing with the small guy for the space. It's a nice window of space that is easily accessible, whether it be beneath a condo building, whether it be in a retail plaza, that you can get, that is out there. It's not like an impossible find. If we were looking for 50, 60,000 square feet, very tough to find. Yeah. Because any location that's available or still available is likely like a C, D, or E site because it's been passed over by the chains. But the 10,500, we can get very close to A locations, but not pay A rents.
Yeah, and and I think a landlord would love to bring a tenant like you into it, like a center, because you really do add tremendous. I mean, you bring up the whole value of the place because of the type of
we have landlords that come into our stores now that we have this newer concept, and they can see this in their developments, and they're like, wow, like, you know what, we want to
probably pay you. You could probably Matt, you could probably get them to give you money, like give you like even like an interest-free loan. If I were you, I would ask like anytime. I would say like, look, we got a couple of choices here. We'll go with you, but look, we need at least $1 million up front, interest-free, and we'll move in.
Well, I wouldn't go that far, but going back to my point is, the one thing we have been able to negotiate is significant landlord inducements. And that is in the form of cash to offset CapEx costs to build out. And that is because, number one, we're a long-term tenant, we're a stable tenant, and grocery retail is very attractive for landlords, and they're willing to pay to have you in their developments because of who else we potentially allow them to get because of the the type of tenant that we are. So that's what makes it so attractive.
So bottom line is right now, the company, the stock is you're trading at less than, I think, 15 million market cap, roughly under 20 million market cap.
Yeah.
Canadian. Yeah. Under 20 million market cap Canadian. Your revenues are over 25 million. You're profitable right now?
We are, especially since we, which we can talk about another time, but we switched to a decentralized distribution model that cut a tremendous amount of cost off of our P&L. So we can definitely touch on that next time. But yes.
Okay. Absolutely. We got blue sky. You're really blue sky potential with the brands you're going to be rolling out with between the future of cheese, and I'm assuming it's not going to be just cheese. It's going to be other dairy. It's going to be a lot of other products you can do.
Yeah.
You got the kitchen originals,
yeah,
which could be huge. And you could basically scale this up to, I guess the question is, how many stores, are you going to, Matt, what do we have to do to get you to open some stores in the U.S., let's say in a market like California, or not even California, because you know what it is, California right now, you got, there's no law and order. You got shoplifting, which is, which could destroy margins. But let's say a place like Scottsdale, Arizona, good market, what do we have to do to get you into the U.S.? Because if you had some stores in the U.S., investors would like say, wow, not even in the U.S. Let's say you open a store in Vancouver, even, because Vancouver is pretty close. I mean, it's almost like, okay, if the guy's in Vancouver, he's going to be in California. They assume you're going to be in California next, right?
Yeah.
So what is that kissing booth? What is that? What is that? That's pretty funny. What is that? What's that thing about? You said kissing booth? What is that?
Oh, that's we have our once again, we have fun with stuff. So it's all our lip balms and everything.
That is funny. That is funny. Yeah. Okay, it's good.
Same thing. We do the same thing with our travel items. We have fun signage and stuff like that.
Okay. Because I'm leaving on it's funny. It's such a genius thing. It really is like a Disneyland. Okay, so Matt, what needs to happen? Can we get you to open a store in at least Vancouver?
Look, Jack, we're always interested in opportunities. We're always ongoing with conversations with different businesses and things like that. So you know what? There's always things that we're constantly working on. and we're always open to options and possibilities. So it's not a matter of what it would take. It's a matter of, is it the right opportunity for us? Is it the right deal? Does it make sense for our brand? And we are always looking at growing and building our brand, but we want to do it the right way. We want to do it with the right partners.
But in the meanwhile, you have enough in Toronto where you see an opportunity to at least 25 stores. How long would it take you to open 25 stores?
It depends on real estate. I mean, that's the biggest thing. But what I will say to people watching this is, coming out off of COVID, there is a lot of opportunity out there. And so we are out there, we are talking to people, we are investigating, and we have lots of things that we're working on, which is, I think, going to be exciting. And hopefully we'll be able to announce some of those things on your program, Jack, and keep your investors clued in to what's going on. But there's a lot of potential going on. So not so much about pinning it down to a time, because we would never want to make a decision that isn't right for our business and inherently right for our shareholders. But we are looking at all opportunities that are available.
Okay, it's interesting. No, I appreciate you saying that, because look, the reality is it's very easy to say, yeah, we're going to have 1,000 stores, by next April or whatever it is. But the reality is, it looks like what you're doing is, it's kind of like, I read an interesting book. Actually, I didn't. I listened to the audio tape. It was, what is it called? From Good to Great. The guy who did the Built to Last, Good to Great. It was an author. He was a business professor in the U.S. It was like a best-selling business book, but it was essentially, what are the qualities of businesses that become really, those dominant in their thing, to become the great companies. And it's like you're doing so many of those things in common. It's like you've built out the systems. You're not in a rush. I mean, it's obviously it's going to come, but this is really, I think from an investor's perspective, you have this massive upside. The stock has got like just built into it, like 10x upside just from the value of the brand right now. Yeah. And whether you get to 25 stores by, it could be 18 months from now, you get to 100 stores, and it doesn't really matter. I mean, it's going to happen. It might take 2-3 years, but this is easily, multiple more than 10 bagger built in. So, all right, Matt, let's do this. We're going to get you back on a live stream, hopefully very soon, maybe this week, next week. We'll talk about the cheese business, which everybody wants to, we'll do that on a live stream. We'll have audience questions, because I know everybody's crazy about, the vegan stuff, the vegan brands. And we'll
look forward to it.
Fantastic.
No, I'm
Matt,
glad I got to show you the store and show your watchers, people who are viewing this, the store, and just show what we're up to and how exciting the potential is for the brand. It's hard. A lot of people will see things online and not, maybe don't live close by to experience themselves. We have U.S. investors, international investors, but something like this gets to show them a behind the scenes look, listen, what the store is.
The reason why I said we got to do this type of walkthrough is people need to understand that what you're doing is so unique. That's the value. It's not just, you're really not in the people, this is not a grocery business. You're selling entertainment. The value of the stock it's like Disney. Disney is not a cartoon company. It's it's a factory of experiences, and it's a whole thing. So they're buying into a spiritual quality also. So it's so that's why I really see this being, there's no reason why this stock can't be 100 bagger from here. I mean, in a couple of years, you get the cheese going, you open up a few more stores. At some point, somebody's going to say, "Wow, this is," they'll pay $1 billion for this, $2 billion for this business, right?
So it's
it's not dilutive. I don't think this is not something which is going to be diluted, because the business you're in, there's plenty of financing, debt financing you can get, very competitive rates. It's all predictable. Cash flow can be modeled. It's a very, very exciting business. I mean, I think this is, we do a lot of tech stocks and everything, but this type of business I think is much sexier than a tech stock, because it's got the same.
Everybody's got to eat. Everybody's got to eat.
It's the same growth. It's a unique thing. It's really incredible. So, Matt, I'm very excited. We'll see you hopefully this week, and we'll talk about the cheese business.
Jack. Thanks a lot. Thanks for doing the walkthrough.
Thank you again. We'll see you later.